Hi, I'm Brien Lundin, the editor of Gold Newsletter, and I am here at the Vancouver Metals Investor Forum. I have the great pleasure of talking with a company that is fairly new to my portfolio in Gold Newsletter, but I'm very excited to bring it to our readers and to the public. It's 1911 Gold. Shaun Heinrichs is going to tell us all about it. Shaun, I like the company and I recommended it because, some people like a junior mining company that is an explorer. You deliver those great results to the market that the market likes. Some people like a company that's on a pathway to production. Some people like a company, like many companies in today's market, that is an extraordinary value relating to their deposit and infrastructure. You really check all those boxes, which is what really excited me about 1911. You've got a mine and mill infrastructure for replacement value of about or more than $300 million. You've got 1 million ounces of resource, high-grade gold resource. You've got a lot of exploration ground and near-term high-confidence targets to expand that resource, and all for a $30 million market cap. Is there anything else that you can actually say about this or need to say about 1911? I mean, it seems like a slam dunk to me.
You've made it tough. That's what's attracted me to this project and kept me kind of where I'm at and kept me pushing forward on this. It's It's fantastic jurisdiction. The geology is amazing. It's a misunderstood asset. You've got the infrastructure already in place, and you're permitted. You're permitted to do what you need to do. We can carry out exploration pretty much year-round on the mine lease area particularly, and if we want to step out to the belt, we've got the connections and we've got the relationships to make that work as well. So we've got really a really great opportunity here in 1911 with that Rice Lake asset.
Yeah,
a chance to have a big shot on goal, I think, for everybody. So it's
the mine itself, where your resource is. I mean, I definitely want to get into that because it's exceptional. But you mentioned that going out further on your ground. What amazes me is the number of mines, previous mines, historic production on your ground, and the grades are just really eye-popping. And obviously, that's historic. That's a long ago, and you would think that there's a lot more to be found.
Certainly, yep. And I mean, that's one thing Dr. Scott, our former VPX, really did a good job of showing is there's a pathway to multiple producers on that property. And, we need to get our new team in place and get them focused on some of those areas after we've kind of finished de-risking the existing underground mine. But yeah, there is a lot of potential. There's big open ground, particularly out to the southeast. And we've traced a number of areas. We've traced mineralization over a number of areas in that area. So I think we've got historic producers over there. We've got an existing resource of, just under 340,000 ounces at 8 grams per ton in that AUMB property. A lot of potential for growth. I mean, that's what's going to carry us to that plus 100,000 ounce production profile. But for now, we've got our hands full really on drilling around that mine lease. We got another 8,000 meters planned for that particular area right now. And we've got plans to get into the underground here as well. So we're moving a lot of things forward as quickly as we can. But building the targets, being careful with our capital, and focusing our efforts on those areas that we think have the best chance of having a big return for us.
Yeah, and let's talk about that a bit because we got a little ahead of ourselves. The actual mine complex where the resource sits now, you went back and completely reinterpreted the geology and the mineralization and came up with a new understanding. You said that there was a misunderstanding of the project. Can you explain to us what the current understanding is?
Yeah, well, I don't want to ruffle any feathers up there.
Go ahead.
I should just, for your viewers, in case they're not familiar with the project, just to kind of orient everyone, this project is located just on the western side of the Manitoba-Ontario border, so we're just across from the Red Lake camp. So in terms of looking at analogs, we tend to look across the border a lot at what's going on in Red Lake because it's really the same type of geology, the same types of structure and host rock over there is what you find on our site. Going to, pre-Klondike, because Klondike, I think, really had it figured out. And Klondike is where we came from originally. We were a spin-out from them. You step back to the company that had them before, and there was a bit of a misunderstanding in terms of the geological, controlling geological features on the site. If you go way back to the old timers, they had it right, and that's why they were able to mine productively for over 30 years. But during that short era between 2005 and 2015, there was a bit of a change in the exploration methods that were used. There were some good discoveries made, which is interesting. But I think the overall understanding of how those controlling rocks trend to the northeast and how the shear zones intersect them, wasn't really driving a lot of the drilling that was happening during a certain period of time.
Yeah.
And that's something we were able to figure out quite quickly. And then looking into the actual mine itself by reinterpreting and remodeling the existing resource, we're able to get a much stronger fundamental understanding of how that resource works in the underground. We're able to isolate areas of high-grade mineralization, see what kind of mine plans we can put around it. So we're able to do a bit of internal scoping already on this, and that's something we are kind of dabbling in. But it's really just furthering our understanding and helping drive our drill program, which is where we came up with those targets that we're drilling on surface right now.
Yeah, and you look at that value, that kind of a resource, 1 million ounces thereabouts across all resource categories at very good grades with so much existing infrastructure. That's obviously, to me at least, worth a considerable multiple of what your current market cap is. But then you look at expanding that resource, and what's very interesting to me is that your drilling now, or you're drilling to expand that resource, is very high confidence drilling, because you're extending a resource that already exists.
Yeah, exactly. I mean, I want to be careful. These are kind of classified as new targets.
Yeah.
Close to mine though, and driven off of historical information. So a lot of the areas that we're currently drilling on surface have actually been tested at depth. And we're able to kind of trace it down and see that there's some good intercepts, probably around 500-600 meters below surface, but they never went back up and drilled them on surface, because this would have happened in the
That's
1950s.
interesting. Usually goes to
it's
usually entirely opposite. Yeah,
exactly. But they were already chasing that major structure down in that San Antonio mine, so they already had their hands full, and going back and redrilling areas that were up above them really didn't make a lot of sense, I guess, at the time. And under Sandgold, which had this before, they never really went back into those areas. There is drilling. It's just there are a lot of holes in that drilling, and amazingly enough, some of these areas we've found are right in those holes. So it's wide open ground in a number of target areas that we're working on right now. And they do look like, they follow it down at depth.
Yeah. Well, the mine itself, what kind of a Capex will it take? What kind of work will be needed to get that back in operation?
It's a good question. It's a fair question. It's probably not one that we've fleshed out completely. I'm actually trying to point people towards the pre-fees that West Red Lake just put out, because I think the 50 million number in there is probably a fair estimate of where we're at. What we've kind of determined is that, look, we need to spend the next year really drilling this out and coming out with probably an updated MRE, and then charging ahead into a more of an engineering study. But we will be scoping it ourselves, just internally as well at the same time. So we should be able to move relatively quickly. So excluding drilling costs and just looking at the pure, what does it take to get into production? You've got probably $15 to $20 million of development, just to make sure you've got adequate number of working faces in the underground, because that's what we're going to be doing. We're going to be doing working a number of areas, keeping it narrow, keeping it tight, and just having a number of productive spots that we're drawing ore from. And then you're going to need equipment. It's going to be dictated by the form and structure you get that equipment in, or whether or not a mine contractor brings it in. But we've kind of said it's somewhere between 10 and 15. And then you've got a little bit of work on the mill, and you've got a little bit of work on just rehabbing electrical, et cetera, on the mine. So you're looking at somewhere around $35 to $50 million, depending on.
But given the resource, and given the resource that you're discovering and adding to right now, that's remarkably small Capex to get somewhere north of 1 million ounce high grade gold mine into production. That's what's remarkable. Your shareholders are seeing this as well. Can you talk to us a bit about the shareholders that have come into the company and seen that same potential? Yeah,
I mean, I'd say you look at, there's obviously shareholders that come in because they see the dream, and we've got a lot of those. They like the drilling, they like to see the progression on the resource, but we've had some of the more sharper investors, which would be the corporate ones or the institutions, that they see the plan and the strategy, and they've gotten behind it and they've put their money into it. And of course, you've got Eric there, who really, likes those high leverage plays.
Eric Sprott.
Yeah, Eric Sprott.
Yeah.
Sorry. Just to be
We
clear.
all know him as Eric.
And Mr. Eric, but exactly. And he likes that leverage play where if you're successful, this has a chance to be something quite significant. So we've gotten a lot of support, and we've attracted a lot of investor interest over the last year and a half with the change in the team, strengthening the bench on our side, pivoting the strategy to focus on the mining, and really kind of de-risking this asset and showing there's a clear path, right?
Right. And that's important. You're extremely undervalued given the resource, given the infrastructure, but the clear path part is the part where you also have all that infrastructure, that known resource, that understood geology and resource, all means lower risk as well.
For sure.
Shaun, thank you so much for telling us the story.
I appreciate it, Brien.
1911 gold.